Welcome, everyone. It's Angelo Robles, and it's been a long time, but welcome to At Family Office, and for my members of SFO Continuity, always a pleasure. And to everyone, and normally I've been doing less and less lives and keeping more things ultra private for my members, but I decided for the last program of the year, where we have a special guest, I'm opening this up a little bit more than normal. I really look forward to it. And ironically, our special guest today is not only our last guest of 2024, but because he'll take 2 days to fully edit it and then distribute it, technically he'll have the unique distinction of being the last guest in 2024 and the first guest in 2025. And I'm very honored because I lost track of him about 7 years ago, where we did meet. He was a speaker at one of my programs at the Edition in Miami. It's a wonderful hotel back in my Family Office Association days, and 7 years appears like a world ago, a very, very long time. And I was getting some emails from some members about, you got to read this guy, Angelo. He's right up your alley. And I'm like, Jordi, he sounds familiar. And he did a Substack about Bitcoin. And I know I haven't done as much in the last couple of years. I've done some, but this will probably be among the more relatively intense Bitcoin-centric discussions to begin with. But don't worry, we're going to weave in a lot on critical thinking, decision-making and investing, and AI. So there's going to be more than enough topics. And really, the audience we're most interested in, it's those of you that are probably a little bit skeptical relative about all of that. And I know I'm on the cutting edge and I'm a little bit out there, and Angelo's looking to see around corners, and sometimes his timelines are right and sometimes they're not. But inevitably, these things that I'm talking about do end up coming to fruition. So on that note, we're going to be unveiling the future, AI, Bitcoin, and critical thinking with Jordi Visser. Jordi is the founder and chief strategist at Visser Labs, a consulting firm dedicated to helping asset managers, family offices, and investors navigate the disruption caused by AI and digital assets. Jordi, it's only been coming up on almost a decade, if I throw in an extra couple of years. It's been a long time. I haven't seen you in forever. How are you?
I'm great, Angela. Lots changed since we last saw each other, so it'll be good to catch up.
Indeed. And that was right about the time I was becoming more familiar with effectively crypto, digital, Web3, was starting to carefully get in a little bit to Bitcoin and Ethereum. And many of my audience knows during COVID is where I kind of went full bore. But we'll get to some of that. But I want to bring up, and I hinted at it, your Substack, which I highly recommend to everyone. All aboard the deplorables. And you explain that word and why later on in your write-up. The investment train of AKA Bitcoin. So it came out really just days ago on December 22nd. And I think there's so much we could talk about that in Bitcoin and weave in critical thinking and a lot on AI. But why don't I start with, it's nearly impossible, you bring this up, it's nearly impossible to find someone who was negative on Bitcoin in 2020 and is positive about it today. Why?
Oh, I'll give you a bunch of reasons, but first of all, thanks for having me. I like talking about this stuff. It's obviously now what I do for a job. And just so people know, I made the decision to do this rather than stay in the hedge fund world, because that's how much I believe AI and Bitcoin, but really digital assets are disrupting the world. And I think the reason that people have a hard time getting rid of this bias that they have, and for those of you who've never seen me or heard me, at the prior firm I was, I used a data science team to basically do behavioral alpha, which was to measure and monitor the way that our portfolio managers were making decisions, really to figure out exactly when it comes to something like Bitcoin, were they able to change their mind? And I think there's a variety of factors for Bitcoin that make it impossible for people to switch their opinions. The first one is it just seems too easy, meaning it's had the best Sharpe ratio no matter how much time you go back. You can pick a random period of like 2.5 years where the Sharpe ratio is not as high, but it's outperformed every asset, as I think by now almost everyone knows. But it's also had the best Sharpe ratio. So the reality comes in, how can something that's gone up so much now the first trade was in 2010. We've seen it now have, let's say, 15 years of a track record. If you were a hedge fund and you produce these types of returns, everyone would love you. If you were a stock, everyone would love you. But for some reason, this is not loved. Number one, you can't value it. And that's the response that I hear from most people, I would say. And you're going to hear me say this, and I hope it doesn't offend anyone. I'm in this bracket too. But anyone above the age of 50 needs some kind of valuation that comes from a textbook. They need some kind 100%. They need to be able to value it. And so that creates the first major issue. The second one is it has all of the hallmarks every time it goes higher of a bubble that your pattern recognition skills kick in and you believe, well, this is going to end badly. And the reason that's the case is because most of the users, they sound idiotic when it comes to understanding assets. They talk about it in Twitter. They move as kind of a group. It just doesn't seem like it makes any sense to people. So the same way that people would predict bubbles by going to their golf course or the golf club and hearing people start talking about things they knew nothing about, they kind of hear those people, and that's what the deplorables was about. Most of the people that are the users, not the few wealthy people, and I say few because there's not a lot of wealthy people. Michael Saylor is now like as I wrote in the paper, the Donald Trump of the Bitcoin community because of his bombastic statements about what's going on. But the reality is the deplorables thing was just most people that like Bitcoin, they're viewed as not intelligent market people, day traders, gamblers. And that's where the second part has come in. I think the third one, and probably hidden subconsciously in people's mind, and it sounds like you've read some of my Substack. I've been doing writing for a long time. I do a lot of things on behavioral biases. Some of them are subconscious. And I think there's an element of fear involved with this, meaning no one wants to buy something at the top. The only time they get interested in it is when it's at the top. And so I think in a very similar way that I thought Donald Trump would win this election, I thought it would be easy. And the reason was the shaming that tends to go on with people who do things in the public eye, and whether it's family members, whether it's investment people, I think almost everyone next year will buy Bitcoin. Whether they like it or not, I think they're not going to brag about it. But I think if you go to their country club, it'll be a who owns more Bitcoin type conversations. They just won't be telling people at their hedge fund or anything like that because of the fear of buying the top. So I just think it's an asset that people don't understand, and they can't come up with the reason. By the time this is done, hopefully I've not only convinced people that there is a fundamental way to at least look at it, there's a way to value it, and there's a way to put it into a category that, to me, Bitcoin is the best AI bet in the world ahead of NVIDIA.
And as I noted in my question, again, when people have a view on something and they really don't investigate it, they have internal biases and beliefs, they effectively practically never change their mind. This comes back to a little bit more of you rather be right than, in my opinion, make a lot of money. You're embarrassed to admit you might have been wrong. The capability of you applying your intelligence, keeping open-minded, and knowing how to navigate in and out, I think is very important. Why is it so hard, since you appear to be very fluid in cognitive issues and biases, why is that so hard for people to do?
Well, let's go through the point of kind of what went on, and I'll make a statement that doesn't always make people happy in our industry. By definition, everyone who's watching this has been quote unquote successful. So anyone that's working at a family office, an investor at a family office, anyone who's been at a hedge fund, anyone who's been at Wall Street, they've been quote unquote financially successful. And I think that is a very big negative for people in thinking about Bitcoin. And part of the reason is because it takes a lot of work to accomplish what we did. We had to go to school. We had to do well in school. If you saw my bio, I didn't go to an Ivy League school. And when I got to Morgan Stanley, when I was just out of college, I started at the lowest level in the firm. I made $30,000 my first year. And 5 years later, I opened an office for the firm in Sao Paulo, Brazil in my 20s. Now, the way that I was able to do that was through hard work inside there. But I graduated magna cum laude at Manhattan College, which is not a college that even exists anymore. It's now Manhattan University. You had to fight through it. But the one thing I had that everyone on this call, for the most part, is going to have is the greatest predictor of your financial success in your lifetime is the zip code you were born into. It's not a random thing. So everyone thinks it's all about hard work. It's all about this. But the reality is, and this is why Bitcoin is loved by people around the globe that were not born in good zip codes. That's why most of the users are in zip codes that historically have never made money in emerging markets. It is not dominated by the United States of America in terms of the number of users. It's dominated from outside. So I think with this one, it's people who actually have not benefited from the system. Part of what we'll go through, I'm sure eventually, Angelo, is the reason people are so upset. The median person. Let's forget the wealthy people and the ones that have benefited so much from the fact that in the US, we've seen household net worth go from $120 trillion before COVID to 170 as of now, $50 trillion increase, while median income during that period is up significantly less than the amount of assets that are owned. So it's just been a world that for Bitcoin, there's been no reason for people to embrace it because they're making so much money on their stocks. They're making money on housing. They're making money on other fiat assets. The argument I will make for you going forward and what I will hopefully either enter in people's minds today or feel free to reach out to me, and I'm happy to do this on a consulting basis, especially with AI rising. As AI rises, it will disrupt all companies, and Bitcoin is the bank of the digital economy. And being the bank of the digital economy, every day that AI accelerates, those people that were not born into the proper zip code, they're getting wealthier. And the companies that are in the public marketplace are going to suffer competition that they haven't seen before, which the rest of the globe has seen. It's just the United States. And it's really 7 companies that are not getting hurt by the competition of AI. It's going to get worse in the next 5 years, not better.
Man, we're reading from the same book there, Jordi. And for my audience in 2025, I have a lot of amazing content and in-person programs coming up that will always be on the cutting edge of what I'm seeing, and sometimes going to be wrong, and other AI and crypto and other global experts. My audience, a lot of you mainly know me from my geopolitical and my investing perspectives, but this all ties in and is very, very important. And what I call the future of the family office. So the future is happening right now. So you hinted at it. I'm going to dive a little bit into it, that the financial establishment and the traditional media, I mean, I even look at people like Jamie Dimon, like Goldman, ironically, that have digital assets divisions. So is that a misdirect? Are they saying something just to have the other banks and big players be lulled to sleep? But they appear, and generally custodial and wealth management platforms, to be dismissive to, and the media especially practically seems ignorant. When it goes down, they beat it to death. When it goes up and seems to make some logical sense and conclusion, they're a little hush about it. Why are we getting what I'm going to label as misinformation, possibly by big institutions, misdirects? Why is this going on?
Honestly, the thing I don't understand is why they have an opinion on it. Why does Jamie Dimon, he doesn't make any opinions on the S&P 500. Why is he talking about Bitcoin? If I want to listen to someone who has an opinion that I value, I'll listen to Paul Tudor Jones. I'll listen to Stan Druckenmiller. I'll listen to Ray Dalio. They're all saying buy it. Why the hell would I care about what Jamie Dimon, who runs a bank, whose job is to basically arbitrage and collect taxes on us for his job, and Bitcoin / the blockchain, all cryptocurrencies, is mainly the number one goal is to get rid of the tax by banks. So it makes perfect sense that he wouldn't like it. For Warren Buffett, maybe I'm missing something. I think value investing died in 2009, 2010. I don't think it's a value investor's world anymore. I think we've learned that. How many great tech companies was Warren Buffett able to buy in the last, I mean, did he own, I guess he owned Apple, but what about the others? Amazon hasn't had a PE below 30 in the last 15 years. So how do you value Bitcoin? How do you value Amazon? Amazon has no valuation to go. It's an amorphous company. So for all of these guys that have opinions that are in their 70s, I hate to say it when it comes down to it. If you're a value investor, there's no way to value this thing. I understand why people don't like it. If you're defending your bank, but you believe in the blockchain, which Jamie Dimon does believe in the blockchain, He just doesn't believe in Bitcoin. Well, at the end of the day, Paul Tudor Jones said it. And for your audience, I wrote about this in one of my Substacks. He wrote a great piece in May of 2020. So just after the government. Okay. I mean, he specifically
the
went in
fastest
there.
horse in the race.
Yeah. And he specifically said the fastest horse in the race. And if Paul Tudor Jones, who was an investor in my hedge fund when I left Morgan Stanley, and I know very well, and whenever we're out to dinner, the number one thing he wants to talk to me about is Bitcoin. That's where we spend the time. He's like, hey, I'm going on to CNBC tomorrow. What, any good new things to talk about on it? He doesn't care about like the details behind it. What he cares about is what Stan said. Stan Druckenmiller said, it's a brand. I wish I owned it. I don't. It's been hard for me to get in. Paul basically believes that you can't guess what a store of value is. It's whatever people believe. And right now, the amount of users in Bitcoin continue to grow at a pace that is as fast as the internet users. And that's why at the end of the day, there is no doubt in my mind that you are going against the fundamentals of technology, which are amorphous. They have no debt. They are capital, not non-capital intensive. And if you wanted to make money the last 15 years, MSCI World ex the US is unchanged since 2007. The market cap to GDP of Europe is 54%. The market cap of the United States right now, relative to GDP, is 203%. So somehow or another, we've been taken through the Warren Buffett rule of the Buffett indicator, and we've gone up to levels that are, historic beyond anything we could have imagined. And the reason is because technology is something that's really hard to value in the same way that Ford or an oil company or anything that's cyclical, you just can't value them. So I'm going to stick with the fact that on this part, Angelo, with everyone who wants to debate, whether it's Jamie Dimon or Warren Buffett or any of them, we've seen more people switch when they needed to make money on it. Michael Saylor has this great statement. You don't find Bitcoin, Bitcoin finds you. And I'll remind everyone that Michael Saylor was famously negative about Bitcoin in 2013 with that tweet I included in the Substack. He changed his mind in 2020. I made my first purchase in 2020, and that was only after I met with three of the largest insurance companies in the country that all in some way, shape, or form were involved in it now. And I just believed at that point that there was something big going on. The only thing was these were all companies that didn't have to deal with a public situation. They were able to do it because there wasn't a going through their earnings and going through it. And that's where some of the changes are that are going to happen is I think more and more people are going to be forced to be involved in it in the coming years. And that's the theme that I have is that we'll bring more and more people and force them in over the next 3 years.
Yes, and I think one of those companies was Mass Mutual that put 25 basis points, about $100 million in 2020. It's paid off pretty well for them. And yeah, there were naysayers when it was down in 2022. Mass Mutual didn't sell. And as more institutional level players, governments, entities, sovereigns get involved, they're going to be in it for the long term. It's a saying, and you could rip it apart if you want. But effectively, skeptics miss everything. Look at the last 500 years. Now, it may take 20 years for people like me and you in certain things, whatever the transistor, the TV, the internet, social media, the iPhone, sometimes a lot less than 20 years, by the way. AI technically started in the 50s, so it really wasn't until much of the last 2 years since 2022. But if you're skeptical and I got my bag, I'm all good, I'm being ultra conservative, let me get my 4 to 5% a year, I'm still going to be rich. Well, I don't know. Your dollar's being eroded, inflation, distributions, taxation. You're not maintaining the purchasing power that may not be felt for decades, but it's effectively inevitable and has been proven right. What do you say to the naysayers? And it's one of the analogies that I seem to hate the most. But I want to get your opinion. Angelo, this is the modern tulips. That's probably the most common thing that I hear from the people that are entrenched in the naysayer crowd. The people where I mention, 10 or 15% of my portfolios in Bitcoin, and you'll be shocked. A lot of them say, I feel sorry for you. They literally use those words, and then they bring up the tulips. Why is that a terrible argument?
All right. Well, if anyone goes back and looks at anything that was a bubble, okay, I don't care what it was, the tulips, the internet back in '99, they don't last for 15 years. You don't get 15 years to be part of the bubble. You don't have users growing dramatically globally. I don't understand the argument towards this. I included in that piece something very straightforward that, if anything would argue against the tulip argument, Mark Andreessen, who's far smarter than all of us on this call in technology, and anyone who disagrees with that, unless we've got Elon Musk on here, there's not too many people I would take their viewpoint of the future over Mark Andreessen. I think I put in that paper. I did. I mean, he wrote a paper saying software is eating the world in 2011. What has happened to global stocks ex the US since that time? The only country that has benefited is the United States of America. And who controls the world of software and technology? It is the United States of America, where those Mag 7 get over 50% of their earnings from the globe. So as I talk about it, the digital economy is a global economy. It's not a country economy. It's completely taken down borders. So Mark Andreessen made it very simple. There were two great inventions that changed the course of, what we're going through today. He named the personal computer, and then he named the internet. The next one was not mobile. The next one was Bitcoin. And the reason was, as he talked about in there, and he wrote in his next op-ed, 3 years after software is eating the world, why Bitcoin matters. And he talked that 5 months later, 20 years forward, we will all be looking back and doing the same thing that we're doing now. How can it be tulips if Mark Andreessen said in 2014, only 5 years or 6 years after the white paper, that Bitcoin is the most important innovation outside of the internet and personal computers? And the reason was it solved the problem that had been here. You talk about how AI had been here for many years. That's true, but it's not true. Machine learning, yes. Democratization of AI happened with ChatGPT. That changed everything. The transformer model happened in 2018. Those are the things that clicked this whole thing in, including COVID, which allowed massive amounts of dollars to be spent and drive these companies up to levels which they still benefit from. But what Bitcoin did is solve the problem that Milton Friedman talked about, which I wrote about in the paper in 1999. At some point, we will have e-cash. We need to come up with something where we actually have digital money. And to have digital money, it needs to be finite, which Bitcoin solved for. More importantly, it can't be replicated, which gets into the finite part, meaning you can't just create them out of thin air, which you can obviously do with dollars because you just counterfeit. So I just think when people want to call this tulips, they have to look back and say, does it have any value? Mark Andreessen's smarter than all of this, and he said it did. And he wrote 2 specific papers on why, and he compared it to 2 of the most important democratization events in technology. So I just don't think you get a chance at a bubble that lasts that year. And if you go into ChatGPT and say, how long do investment bubbles usually last? It's no more than a year to 3 years. This has been now, 16 years of a bubble? I just don't see it.
Yeah, I guess I could also say, unlike tulips, it's not perishable. We have a global economy, and it has, 420 million people that have used it at least once or purchased it. I don't think tulips were quite that. You're going to get the question we all do, effectively, what backs Bitcoin? It's backed by a hell of a lot of power, I'll tell you that. And Michael Saylor talks about this, more power than runs the U.S. Navy. I mentioned 420 crypto advocates around the world. And if you looked at it as pure market cap, it would be the 7th largest, quote unquote, asset in the world. So you're going to get those questions too. I'm sure you do, from when you speak to wealth management organizations and MFOs. Jordi, I just don't get it. Again, and boy, you're being more hard-hitting than me. This is rare. I'm going to have to pick up my game a little bit. I've spoken about one of the biggest predictors of you believing in buying Bitcoin or not is, honestly, if you're over 40 or under 40. That's, if I really had to simplify it, that really is it. And as opposed to looking at the young ones as being foolish and looking to get rich quick, although part of that may play into their psyche, look at it the other way around. Why are you so skeptical? And are you so skeptical of everything, like I mentioned earlier? So how do you get over when you're speaking to an MFO, a wealth management organization, a custodian, that I can't see, feel, and touch it? What backs it?
Yeah. Well, this one is really simple to me. So Bitcoin isn't a binary decision. And this is the problem I have with most people. Almost everyone on this, call right now owns a company like Ford. Okay. I mean, it's a garbage company. Hasn't produced any returns. It's unchanged for whatever years. There's a bunch of those in the S&P 500. There's more of them in the S&P 1500. Everyone here owns passive things, which means they own a certain percentage of their net worth in a bunch of companies which don't make money. Over 50% of the companies in the Russell 2000 are unprofitable right now. So people own this garbage through diversification. The Barclays Ag is unchanged since 2019. It's produced 1.5% return since 2013. I already gave you the MSCI World X the US. If you're a diversified investor, there's plenty of things that you own that are garbage. So rather than think of either or on Bitcoin, the argument I made to people is it has to be part of your portfolio. Even if it's only 1%, it increases your performance. Why would you not have 1%? Whether you lose 1% or not, it's not going to zero overnight. It's gone through this. People talk about the falls it's at. I sat in my office and watched so many people come in to talk about Cathie Wood's investments in ARK and all this stuff. And I watched that stuff go up and go right back down and sit at the same level it's been for 5-6 years. So people own plenty of stocks that haven't moved in their portfolio. And so as far as I'm concerned, for a diversified portfolio, you should have a certain percentage of it. And one of the videos I did a video called The Bitcoin Story. I highly recommend people go to my YouTube channel. It's a 40-minute video. Everything that I do for my videos is data-driven. So when you're doing a Bitcoin story to tell people why they should own it, and you're doing a 40-minute thing, I don't remember how many slides, but let's say it has about 100 slides. These are not PowerPoint. I don't do that. Angela asked me if I wanted to do one for this. I said no. But if you go there, what I do is I take actual data from the world. I take actual news stories to make sure that you're caught up on it. I've always considered myself an excellent person as a filterer. I don't get stuck reading books. I don't get stuck caught in places that don't give me good value for the time that I spend in it. I'm very efficient with my time and learning. And for Bitcoin, you can go down too many rabbit holes of why something won't work. I'm a macro person. We haven't even gotten into anything on the economy or anything on the situation. But the number one argument for Bitcoin as a macro person is very simple. Everyone is having their wealth debased. Wealthy people are benefiting from QE and all the money printing that's going on. But inflation is outperforming most assets globally at this point. I think commercial real estate is definitely in that camp now. I think as time goes on, it will continue to outperform. And so most people are just left with their public stock market and their house as their greatest sort of wealth. Well, the stock market to me is going to start to have problems, not go down. But when you're at 200% of GDP and the prior high was 138% of GDP using the Wilshire 5000, you're not playing a game that you should feel confident in owning stocks as your greatest thing relative to GDP. I think the growth is going to come from private companies. I went from hiring data scientists to do the coding for me. I took 5 courses of AI, of Python, to be able to use AI. And within 6 months, there's stuff that I can do, not from learning a Python, but by learning enough of Python to be able to use AI to build stuff for me. This is going to disrupt businesses, and people are going to be looking for something that works. And like I said, NVIDIA will continue to do well relative to the market. And the same thing will go with Bitcoin, except Bitcoin will keep going and at some point accelerate. And I think it happens this year because the government's coming in. And I'll just end on that, Angelo. I can't believe with an administration that just hired so many pro-crypto people, so many, after an administration that was hell-bent on being Jamie Dimon's end crypto, how people can't realize that even if it's a bubble, the bubble's about to get supercharged. The government coming in is pro-crypto. I don't know how to say that loud enough. Before we started this, Hong Kong announced that they are going to hopefully start a Bitcoin reserve. This is a global arms race for AI. It's also now becoming a global arms race for control over Bitcoin. And other governments, particularly Russia and China at this point, are making a play. I don't see how this doesn't turn into a race. So for people that don't own it, put 2% in your portfolio. If it goes down 50% next year, it costs you 100 basis points. The only time it tends to go down 50% is when Amazon and the other stocks go down 50%. So you're not going to get hurt by this stuff in any meaningful way. So it's not a binary decision. And I think that's the problem. People are making binary decisions on it.
I'm going to actually think that Raoul Paul, when I had him on a couple of times, basically said exactly that and made it really simple. You have so much underperforming assets. Why don't you take 1 to 5% of that and put it into something like Bitcoin? I can't guarantee you it's going to go up like 60% since 2020 or well above that since pre that. But you have so much that is doing so bad if you break it down. Effectively, what do you have to lose? And if it goes to zero, you live to fight another day. It's 1, 2, 3, even 5%. I could argue even upper single digits, but part of that's going to depend on your goals and your time horizon. You've said that Bitcoin is, I believe, something like the safe bank of the digital economy. How is it going to evolve into a dominant asset class? And I guess the real question is, what, if anything, is going to hold it back?
Well, this is the interesting part. So one of the things, I assume you had me on here, not just because of the Substack, but because you get the impression from me that I really don't care about other people's views. I speak my mind.
Love it.
I do my research. Yeah. And I grew up in a world of handicapping horse racing. That's where my father, who was a construction worker, he basically taught me the probabilistic side of, it's not about trying to predict who's going to win. It's trying to find a scenario where people don't like your opinion. I love the fact that Bitcoin is hated by almost everyone that I know throughout my career on one side, and then every young person completely agrees with me. Do you know what that's like to be sitting there and going through this and being like, wow, this is fantastic. I actually get to be a contrarian right now while everyone else wants to crap all over something that's been going higher for 16 years. That doesn't happen too many times in your lifetime. It's never happened in mine that I can remember. So I do my research, I go through it, and every week, that paper was not the one that I wrote about Jeff Booth, but I wrote about Jeff Booth 2 papers ago on Substack.
Yep.
And Jeff Booth, if you haven't had him on the show, I don't know if he does these. I listen to him on podcasts. So the way that I learn is I right now spend about 4 to 6 hours a day on podcasts. I only learn from podcasts. I don't read any research reports. I don't want to read anything from Wall Street. I find it a waste of time. I will give you the outlook for next year on everything you need to know. GDP will be good next year. The Fed will probably do nothing next year. If anything, they'll cut. I highly doubt they'll raise rates. There may be a surprise on oil going higher for a little bit. That'll get people focused on inflation. But we are now in what I call the boring time. The government is spending 7% of GDP a year, and the hyperscalers are spending 1% of GDP, and consumer balance sheets are great and corporate balance sheets are great. Anyone looking for a recession next year, good luck. I'm so sick of this. I wrote a recession obsession piece during the summertime, during the last one. I'm hoping that's the last time I have to hear about a recession, which is a concept that doesn't exist anymore, due to the fact that we're entering a post-scarcity world driven by AI and driven by software. So I think when you get into just kind of looking for a contrarian view and going through this, most of the things that I've heard that are really interesting that get into Bitcoin and where it goes is, my view is that when we go forward, there's no other cryptocurrencies that are going to work. So Bitcoin to me is like a bank for one reason. As you invent and create things in these little tiny, let's use Ethereum, let's use Solana. These are all innovations. They're all things to build on top of. They work for a period of time. And this is where Raoul Pal and I disagree. I think Bitcoin is by far the best investment, by far. I don't care about the other ones. I think they'll do fine for periods of time, but then they'll be replaced, just like all S&P 500. There'll be a better technology that comes out. The fact that Bitcoin doesn't have a technology is what makes it so special. It will be used for all large purchases. It will be the bank. So Russia just talked about using it for global trade. That's the kind of thing that it'll be engaged in. That's what it's going to be used for. It's not money. You don't use this to have the fastest transactions where robo agents are actually transacting. That's what you use Solana for. That's what you use Ethereum for. That's what Stripe got in to purchase Bridge. That's not what Bitcoin is. Bitcoin is not as good a technology, but it's the safest asset. Like you said, it's one of the largest assets in the world at this point. It's still 1/10 the size of gold, but by the time we do our next podcast, if it's in a few years, it will be approaching gold. And when you get there, you start to realize, well, why hasn't gold been used for transactions? Because you can't transact in gold. If you read the report on Germany trying to get their gold out of the United States, it took years. And they were still ahead of schedule, taking years. You just can't do that. But with Bitcoin, you can move large amounts of money in short amount of time, much better than a wire or anything like that. So for me, I've just come to the conclusion that Bitcoin is where all of the relative benefit is going to come when you compare the fiat asset, let's say debasement, into Bitcoin. It will happen slowly, but it's going to happen in a way that messes with people's minds, because if someone in Indonesia builds a model which competes with Google for just $500,000 a year of revenue, okay, that's not a big thing. It doesn't hurt Google, but you know what it does? It hurts Google's revenue by $500,000. If someone in Africa does the same thing, if someone in Brazil does the same thing, if someone in Argentina, that's what AI is going to allow, is the rise of these mini entrepreneurs to basically take money from the companies. They're putting their money, because they believe in Bitcoin, into the digital economy world. And that's where this disruption is going to come. So over the next 5 years, Bitcoin will continue to benefit. US stocks and US companies will see these little maggots just eating at the revenue as they are in the greatest spend you have ever seen in your life. $300 billion plus next year they're spending. The one thing I'm certain of, if you want to call a bubble, the AI spend by the hyperscalers is an absolute bubble, because it's a bet that they're going to get the revenues. They're not going to get the revenues to offset how much they're spending, in my opinion. And that's a better bubble to use as a gauge than Bitcoin.
You mentioned something that I guess I can't let go, and the audience is already asking. And I agree with you. I do read the Wall Street Journal and Financial Times. I like it, but it's not my main source for a variety of reasons. And I could get into media biases, but let's be good today on a geopolitical level, and I'll ignore my last comment. There are podcasts I like, but even I know that I want to be careful not to go into an echo chamber. Maybe could you name for our audience 3 or 4 Substack podcasts, a little something off the beaten track, cutting edge that you like and you're willing to share?
Yeah. So first of all, let's assume. So right now, GDP in the U.S. is 29. I'm going to answer this first by giving people a reason why I'm going to give the answer that I'm going to give. So the U.S. economy is now $29 trillion. It's growing at 5% nominally a year, which means we're adding about $1.4 trillion in the global economy right now. The government has a deficit of 7% of GDP, which means over $2 trillion. So it's really hard to have a recession when the government deficit is 7%. And just so people put in this context, is if you want an Outlook paper that I did read, it's only because I know the person, I worked with him, and I think his insights are fantastic. And he's very middle of the road, but he's not working for a Morgan Stanley or Goldman Sachs where he has to try and, I don't know, be ego driven. Henry McVeigh used to be the strategist of Morgan Stanley. Henry McVeigh is now in charge of the balance sheet of KKR. He wrote a 87-page Outlook piece, which came out in the last week or so, titled, I think, "The Glass is Half Full Still," something like that. And Henry goes through a lot of important points in there. But one of the things that I kind of find when you go through this is, if the government is 7% of GDP and the unemployment rate is 4%, and you take the difference between those two, the only time we ever get to 300 basis points different is during a recession. So we are spending at the government level like a drunken sailor. The hyperscalers are going to do 300 to 400 billion this year. So go back to that growth phase. right now we're adding about 1.4 trillion of growth, which means 25% of that is coming from the hyperscalers. That's an amazing number. I mean, that's just mind-boggling. And that's why if you're really getting bearish on things, these guys believe in this. And whenever you hear things like the scaling is ending, well, that's not what these guys are saying. They're spending tons of money and they're in an arms race to spend more. And the numbers are just staggering and they need power. They're buying power. So what I look for, knowing how important AI is to overall GDP growth, is I want to listen to podcasts with people who know more about AI than I do. So the first one is BG2. BG2 stands for Bill Gurley and Brad Gerstner, two very good technology people. And they do a podcast where if you're going to listen to one just to try it out, they had Jensen Huang on, the CEO of NVIDIA. Whenever Jensen speaks, it's the most important thing. Go to that and go listen to just that interview. And he just did one today with a semi-analyst, Dylan Patel. I listened to it this morning. It was one of my 4 hours. It was listening to him. That's one I would definitely go to. I listen to the All In podcast every week, although there's at times...
It took a big hit since Sachs isn't there. A big hit.
I completely agree.
Offense, I'm going to get in a lot of trouble for this. No offense, Aaron Levy, but you are a terrible substitute. You may be a wonderful entrepreneur and a great guy. You're not made for the All In podcast.
No. Here's the thing I'll say, where Aaron Levy, of everything on this week since you listened to it, he's just a horrible interview. He's a horrible, he didn't say anything really insightful, but he absolutely positively ends up focusing on AI more. They've replaced Sachs with people that obviously have a similar political bent because they wanted to keep that. But Aaron doesn't seem like any political bent. So what they focused the attention on was AI. I'm just trying to give you things that give you some more insight into what's happening in Silicon Valley. And those guys are absolutely on the ground there. So the stuff comes out. It was better when Sachs was around. Other than that, I do things thematically. So Peter Diamandis and Moonshots I listen to regularly.
Sure.
Peter Diamandis.
I've interviewed Peter several times.
Okay, so he's great to listen to. And then I just kind of go by people. I always listen to Eric Schmidt whenever he speaks. He's one of my favorite people to listen to. You should have him on if you haven't had him on. He seems to be doing
and trust me, Jordi, I would like to. He may want to see a couple of million more followers on my side, but let's just say I may know the family office a little bit and I may have some inroads there. I'm working on it. Okay. His quote, we're going to get to AI in about 10 minutes, everyone. But his quote, this is stuck in my head and I use it in all my material now. AI is underhyped. AI is underhyped in Andreessen, and I would follow any podcast he's on. Andreessen, AI is going to be the control layer for everything. I am telling you, those are 100% accurate comments. I'm living more in AI than I am in crypto. I'm in Silicon Valley all the time. I've interviewed Ray Kurzweil and many others. I'm telling my audience harder than I mentioned Bitcoin 4 years ago, and I'm telling you, they're a little slow to adapt. Now, I got a lot of content coming up on this in the first month of the year, so just be a little patient, audience. But I don't want to get off track. If I had to throw in a kind of a geopolitical podcast that I like lately, I do like Tom Bilyeu's podcast. He's gotten a little doomsday-ish, which some people could find a little bit of a downer. Although, given that I'm very active in sovereign risk issues, I've enjoyed some of his guests. On a little lighter fare, but maybe overall thinking, critical thinking. I mean, I like Chris Williamson. I think he does a good job. I like the All In like you do. There's a couple of niche ones that at the moment I'm not going to mention. But I agree with you that now the problem is, okay, let me ask you, we're getting a little philosophical now. If we take in too much information, are we really thinking for ourselves? How do we know when to take in information, be careful of the echo chamber, and still be a critical thinker for ourselves without putting in 500 hours?
Well, so this question has come to me a lot over the last, I'll even say 20 years. So I'm a systems thinker. I only look at the top what people do is they get caught in looking, in my opinion, at micro trends and trying to extrapolate them, because that's what's made you money in the past. I try to look from a top-down basis of what the world will look like and then go backwards. So we mentioned Peter. Peter had the most important change in my lifetime. If you would have talked to me if you would have asked anyone in 2013 who worked with me, who had worked with me, well, what makes Jordi interesting? Well, let's see. First of all, he's a perma bear. He's always worried about things, which is good and bad, meaning he'll trade the markets when he's really bearish, but I made the most money in my life in 2008, and I'll always be proud of the fact that that was my best year personally going through it. But everything changed for me in 2013 when I met Peter Diamandis and I went to Singularity University, because that's when I realized that, oh my gosh, everything that I built in my life and everything that I did for forecasting the future was based on the concept of leading economic indicators, which was to filter out data points that helped you predict the future. I'm an Elliott wave theory person, so I look at charts. I look at data points that most people don't look at, and I use assets as my gauge. The problem is now that your question about too much information, honestly, the smartest people that I know, they're having a hard time being bullish if they're macro people. I've seen people that have been bearish. I mean, Dave Rosenberg,
Sure.
who I'm sure you've interviewed.
I know him too.
I never met a time that he was positive in my lifetime. And
That broken clock is going to be right twice a day. That's the problem.
But here's the thing. I do a YouTube video each week, and I had been called a permeable constantly. And then I sent out one 2 weeks ago saying stock market warning signals suggest a regime shift is coming, which I believe has happened. And within there, I emphasized David Rosenberg writing a bear laments or whatever he wrote that basically said, I've given, I can't be bearish anymore. And he literally did it at the top. So I do care about people that are bearish, but only from the perspective of when they actually change their mind and when they write something positive, because that's usually a negative thing, not a positive thing. So from my side, in looking at all this stuff, I want to figure out what the world's going to look like. And this feeds into something that's really important. And you mentioned it, and we didn't finish it on the podcast. So if you believe in what Ray Kurzweil says, what Elon Musk says, what Eric Schmidt says, what Dario says from Anthropic, Mo Godwell, I can go through the list. They all say the same thing. The next 10 years of innovation will be equivalent to the prior 100. So I just want to make sure that everyone puts that in the context. If that's true, which I absolutely can say with certainty is what I'm going through already on my coding and everything that I'm seeing. It's mind-boggling what I can do with AI today that I couldn't do in May. So if that's the case, and we're going to have 100 years of innovation in the next 10 years, I've always said the S&P 500 is very simply about 70% innovation, 30% money supply. That's it. That's my equation of what the S&P 500 is. So if you believe innovation is not going to happen, so that's why Europe can't go up. Europe can't go up because they're not innovating anything. China is running to a problem. Like you can't innovate
at regulation. That's what they're leading at.
Yeah. And so that's a problem. And it really got worse after 2007. As I've talked about, the US just took over the world because you had the simultaneous, thing of the iPhone comes in, the governments find these liquidity tools, which allow them to stop any contagion blow up that happens in the US immediately. And thirdly, fracking ends up changing the oil dynamics of the world overnight. Those three events happened within basically 2 years of each other. I mean, fracking, like AI, had been around for a long time, but we figured out how to actually monetize it and do something with it. But those three things changed the entire world at that period, and we've never gone back. So the rest of the world, as Henry McVeigh says, is capital intensive. That's why when rates went violently higher, we didn't have a recession. Because guess what? Corporate receipts or corporate interest payments went down. And I remember when I sent that chart out 2 years ago, and nobody sent me anything. And I went, do you realize that corporate interest payments went down as rates went higher? Do you guys understand how important this is? We're back to 1980 levels, and that's because the hyperscalers are loaded with cash. So they have no debt and they have cash. And because of that, their cash coming in the door was dramatic. This is how the world has changed. And this is why when you get into critical thinking and going through it, if you're waiting for a recession, you're screwed. So by filtering through the information you're reading, I don't even bother with people predicting a recession. Literally, I don't even bother with it because there's nothing that they can say. If you were going to have a recession, here's what's got to happen. The stock market needs to fall and stay down. People need to be fired from jobs. It can't happen. 50% of the people now work in basically consulting jobs or in non-employee jobs in the country. We don't have the same economy that we used to have. So when I say there can't be a recession unless we have a pandemic or unless aliens come down and blow up a city, there's no way you could actually have a recession because it's a scarcity thing from cyclical times, and we don't have that. So I try to filter out reading anything in particular. And then if I hear on a podcast a Vancouver mayor talk about why he wants a strategic Bitcoin reserve for Vancouver, and that leads me to Jeff Booth, that's the way that I learn. I connect dots on interesting things. And I will tell you as a fact, I have incorporated the reason that he wants to do a strategic Bitcoin reserve for Vancouver to my own children. So my children who were born in a good zip code, 3 of them are social workers. So they're do-gooders. They want to help the world. They want to go through it. Well, if you want to be a social worker in New York City, one of my daughters works for a fertility clinic. So she graduated with social work degree. She works in a fertility clinic. She can't live in New York City. She has to take a commute from New Jersey, making less than 60 grand to start off. She can't live in Manhattan. And so what ends up happening is, how does she have a chance at ever having a good life if she's commuting 3.5 hours a day as a young kid? And that may sound like, well, you put your, you get to work, you do it. I did it. You did it. We all did it, Angelo. No, it's not the way it works for these kids. They don't want to be taking a 3-hour commute because they realize it's a stupid amount of time to get on a train early in the morning. She has to leave at 4 a.m. It's not safe. All of these things wrap up into one thing. And if you get the time, go listen to the guy from Vancouver talk about why he wants a reserve. It's to help people like my daughter. So I set up the exact same thing. I set up strategic Bitcoin reserves for my children. They're not allowed to touch them. They're just there, but they are there to compound and to be the savings for them, because I believe, and that's the way it should be. They can do whatever else they want with their money, but I set up reserves for them to deal with the same thing that the Vancouver Mail did. So that's the way that I kind of learn, but it's also the way I filter out the information. That was more interesting to me than anything David Rosenberg could write right now.
Well, I completely agree. And by the way, audience, I'm really enjoying this. I could go 3 hours easy with Jordi on Bitcoin, but after a couple of more questions, and we sprinkled in a little bit of AI and critical thinking, but that's going to start to take the forefront. But I do have to ask some leading questions that I think are going to come to an important point. Maybe we'll speed these up a little bit. Does the rise of Bitcoin represent a failure of the global banking system to adapt, or is it simply the next phase in an economic evolution?
So there's 2 forces that go on in the world. I mentioned the innovation side of S&P. So this is a fact for everyone. This has gone on since people left their regional spots, 2,000 years ago, for the agricultural revolution. So break it down as the agricultural revolution, the industrial revolution, and with 2007, that was the end of the industrial revolution for 2 reasons. The caboose, the last part of the industrial revolution, was China. So they colonized Mars, as I like to joke about. They spent all this money on that time, and now China's paying the price for it. At the same time, the iPhone was born. So the digital revolution started in 2007. Like Angela said, you can make the argument that it started earlier or whichever way you want to go with it. But you end up in a situation right now where that part of our lives is growing rapidly. The older you are, as you said, above 40, it's not just the dividing line for crypto, it's also the dividing line for AI users, but it's also the dividing line for another thing, net worth. So below that level, the net worth drops off dramatically, meaning most of the net worth of the globe is owned by people above 55, 65, everything you go through it. So in terms of just watching how this will play out, where this will go, it's not about the banks. We have deflation happening every day since the plow through innovation. It's just that the deflation is going faster and faster as we entered the digital revolution. To offset that, the government needs to print money and be inflationary, because the benefits of the deflationary side are always the people who invent it. And so you get this massive distribution of wealth problem. So right now we're at a point, and this is what I wrote in the Bitcoin paper, which is really important. From the Declaration of Independence in 2007, we we created 8 trillion of debt for the United States government. Since 2007, when the iPhone came in, we've added onto that to get to $36 trillion. You have to think about that. We are printing money. We created QE to allow us to buy our debt so that it doesn't collapse. So we've hit a point where, as Jeff Booth would say, the natural rate of deflation measured through innovation is, say, 5%. The government gets us to a point where inflation in the US is now 3%, which means they're printing enough money to create 8% of inflation on top of the 5 that's negative to get us to that number. And so those are the two forces that are going on. And what Bitcoin represents is the need for people on the middle income, the bulk of the people who are basically not able to keep up. I think everyone knows this number, but maybe they don't because it's probably not their clients. But 70% of the United States of American people live paycheck to paycheck. So when you get into numbers like that, and again, it doesn't mean people are like starving. What it means is if they didn't have a job for a year or two, they'd be screwed. They need their income. They have to keep working to go through it. And so 70% of the people in that, they're not enjoying life. And that's why the consumer confidence levels are low. That's why you've had all these problems that have gone on. So if you take those two forces, deflationary and then inflationary, and asset inflation is happening, the government has to fill in the gap. And what Bitcoin represents is an alternative to that system. And the digital economy equals abundance. Abundance means costs go down. It means asset prices go down in terms of the ones that are levered, which is all the fiat assets that everyone on this call owns. Doesn't happen overnight, but gradually Bitcoin gains relevance relative to those assets. It's been happening around the globe. It's been happening in the US stock market. It only hasn't happened for one group, which is the Mag 7. And my big trade for this year is to be long Bitcoin, short the Mag 7.
And we're not going to have time to go into the quantum issue, which, by the way, is overrated as a threat at the moment. And there's going to be various sports and things the community could do. If this was a deep 3-hour conversation, that would be one of the subjects. I think kind of my last question on the Bitcoin front, and we are going to go a little dark. The little dark part is, are central bank digital currencies a Trojan horse to destroy Bitcoin? And will they legitimize, maybe that's the better word, or will they legitimize decentralized finance as a whole? I'm having a hard time imagining, and I tend to be a little negative, and I'm very into freedom and sovereign risk. How could the government like this? They can't control it. Therefore, they're going to try to ease us into central bank digital currencies. They're going to make it programmable money, where if we start to follow some of the policies of the WEF and other organizations, I'm contributing to greenhouse gases by eating more than 2 pounds of meat every month. They're going to know everything I do, track everything, and could freeze or take my money in my wallet like that. Is this practically inevitable, but do we have a 50-year runway?
I don't know how the end game of, let's say, nation states happens. I won't get into that. They're already being broken down by what's happening with cross-border revenues and everything that's gone on. Central bank digital currencies in my world make no sense. Bitcoin's not gaining attention and gaining traction because people want a digital currency. They're investing there. So let's separate two things. Transactions, that means US digital currencies will compete with stable coins. It doesn't mean they're going to compete with Bitcoin. Bitcoin is a store of value. It's where people put their money, and it's someplace where people speculate. Everyone on this call speculates. Everyone here goes through their investment process and they pick something relative to other things, whether it's a hedge fund manager, a VC fund, a stock, a bond. Everyone here is speculating. Anyone who doesn't believe that, that's what we do. We're gambling on the future, and we're trying to do it in a risk-adjusted way. Bitcoin, to me, in a risk-adjusted way, relative to the S&P 500, relative to the Euro stocks, if I said right now, what would you rather own, Bitcoin or the Shanghai or Chinese stocks listed in Hong Kong? It might be an easier comparison. I think the problem is the S&P 500 goes up 20% a year. As long as it's going up 20% a year, no one needs Bitcoin. If the S&P 500 is flat for the next 6 months and Bitcoin's up 50, you're going to have a lot of people that are dipping their toe into the ETF finally, because they have a job to do, which is to outperform, meaning they need to do something else. So the digital currencies from the central bank, Angelo, are really more for stable coins. They're about more for competition in terms of the global transactions. But in the US, and if you guys haven't seen this, you can go look this up, but there's the TBAC, which I mentioned in another thing. That's the Treasury Borrowing Advisory Committee. That is a group that gets together with the Treasury to talk about everything that's going on that's important. They got together in October. You can type in TBAC crypto or TBAC Bitcoin, and you will have a presentation made by the people on that committee. That includes people, JP Morgan, all the banks, hedge fund people. They made a presentation about the way the world will look integrated with digital assets. One of the reasons that Donald Trump and I think most of the Treasury is starting to become happy about digital assets is that in the stablecoin world, and just so people get it, a stablecoin is a token that is connected to a fiat currency. So it's backed by a fiat currency. So the most popular backing of stablecoins at 99% is the US dollar. So when you go through Treasury holdings, right now, stablecoins own $200 billion of treasuries, which means that if you're someone in Brazil and you want to hedge against the valuation in the real, you put your money in a dollar-backed stablecoin. That stablecoin goes out and the group buys treasuries. So a Brazilian is now owning treasuries. So why wouldn't the US be in favor of stablecoins rather than a digital currency, on a central bank digital currency? They don't have the technology to do it yet. It's going to take a long time for them to compete. So it's not a competition for Bitcoin, because that's a speculative asset or a store of value. Stable coins is a transactional currency. That's the one that they'd be competing against, but they're way behind on that framework.
I mean, again, audience, we're going to transition right now, but so much more. And I'm going to do more on it in the first quarter. We could talk about quantum, actually quantum from also an investing perspective, being tactical, has been very interesting the last month. I know I've been investing and I've been dabbling. I know the Bitcoin maxis are out there, and I love you, bros. I love you. But like, Angelo, you're not talking about not your keys, not your Bitcoin. I understand that. I'm very concerned about sovereign risk. This is not the conversation for that. Right now, we got to get people just getting into it and adapting and feeling comfortable. And then we could get into how they could have their own, cold storage wallets and the benefit of that and all that good stuff. So we're going to save that for somewhere during the first quarter. We did have a question that came in from Christina, basically asking, Jordi, do you happen to have a fund? I would love to somehow get in touch. I don't think you're currently doing that, but I'm not sure.
No, and as I mentioned, once I stopped working at the hedge fund I had been at for 20 years, I immediately started getting calls to launch a fund or to work at one of the big platforms. And as much as I was interested, to be honest with you, luckily I've done a good job of saving, so I don't have to take those jobs. But most importantly, the last thing I wanted to do was go through the grind of raising money, going through this whole thing. And to be honest with you, Christina, I'd rather help people find hedge funds. I'd rather help people use AI to reduce their cost of running their business. I'd rather help people get them involved in Bitcoin and find ways to do it in a risk-adjusted way and build software for them on things. I've done a lot of different things in my career, and AI allows me to leverage those. And I'll just give you, one little element. At a hedge fund, you're trying to run a business, you're managing people. At the very end, the hedge fund industry is going through a very difficult time. The fees have come down, but once you start getting into the element of a hurdle rate, and you're going to have rates at higher levels, and people aren't making as much money as they thought they would, having left the Ivy League schools. People get very frustrated. They get very angry. And my office became a therapy office for life for people, not even work. And I just got tired of it. There's a way to get out of it, but you have to go spend the time coding and you have to go spend the time building stuff. And right now, the coolest thing that I'm working on for hopefully family offices as well as hedge funds is the ability to build software to help them, and models where I've used a model that allows me to do what a team of 4 people would do at the hedge fund I was at, meaning a portfolio manager, 2 analysts, and a trader, the trader being a technical analyst. You can do all this stuff with AI agents right now. And this stuff is happening real time and going on, and it's mind blowing, and I've seen it. So,
Jordi, you really set me up pretty well. We may get to a little bit of this in our last 10 minutes, but audience, what Jordi just said, that is what I mean by the future of the family office, both the MFO and yes, the SFO, and it's going to be drastic. It's not just the leaner model, that's a part of it. It's fundamentally different. And this year, you're going to see the rise of the AI agents. So I have a lot to say about this. Stay tuned. One, I got 2 big masterclasses coming out that are going to talk about it. I'm going to do some more public programs in January as well. And a little bit to Christina and others that I know are in South Florida. I'm doing way more larger scale programs, mainly focused on my members in 2025. I have Palm Beach coming up really the whole week of March 24th, the main days being the 25th and the 26th. And although I briefly mentioned it to Jordi, if he's available, I will be inviting him to be one of the keynotes there. So you'll have a chance to meet him, Christina, and others. So simply stay tuned and go to angelorobles.com and join so you can be assured of getting effectively a front row seat and extra benefits, which towards the end of the interview, I have some comments on that we'll get to. Okay, a little bit like Columbo here, Jordi, I guess I do have one final question on Bitcoin. This is always a question that even Michael Saylor didn't feel comfortable in when I asked him. What would cause you to change your thesis on Bitcoin?
Yeah. So when you say change your thesis, let's just assume my thesis is that it'll outperform fiat assets going forward. The thing that would change my mind on that is somehow the theme of abundance is either not happening or it's happening slower than I would have anticipated. So I have this vision where, and it's not even a vision, just so people know, like when you're talking about 2 to 10 billion robots on the planet by 2040, which is the range of estimates from Citibank, which recently came out with a report, which you can get online. Elon Musk had 10 billion in an interview with Peter Diamandis not that long ago. Everything is free. And when I say everything, obviously not everything, but the cost of almost everything goes down to zero. Let's assume that takes longer. And it goes into, 2100. That would be the point that Bitcoin loses its momentum. And I think it's a momentum driven thing, meaning the movement of people's sentiment of hatred of governments, hatred of the banking system. As Michael Saylor says, if you don't trust your bank, you don't trust your money, meaning your currency, and you don't trust your government, then Bitcoin's the place for you. Something would need to roll that back. What Milei is doing in Argentina is working right now to some degree, meaning the stock market is going higher. If somehow or another governments are able to extend this further and they can start to make people happy again, then I think the thesis won't happen. And I'm sure even Michael Saylor, maybe he doesn't think about these things, but as a trader where you're always worried about what the outcome could be, I would worry that all of a sudden the emerging markets don't need Bitcoin anymore. And that would be the number one thing. But I just don't see that happening. I just don't see a situation where VC starts to work again and there's public companies that have moats around them for the next wave. I don't see that. So when you're in a world of centralization and Bitcoin is the only alternative for decentralization, you have to come up with allow centralization to last. And I don't see how this can go reverse. I see it getting worse, not better. And all the things that I mentioned are just making people angrier and angrier. So that would be it, that people all of a sudden get happy and they're joyous. I don't see it happening.
No, and for the audience, and this is part of sovereign risk in my work in disaster preparedness for families, centralized effectively means a single point of failure. It may be one computer gets shut down. It may be the government. It may be you're deemed to be a combatant of the state. Think of what happened with the truck drivers in Canada. Decentralized means, well, that kind of can happen. Maybe early on in Bitcoin when it didn't have network effects and it was too small, but effectively for some of the reasons we mentioned today, if it did have that danger period, it probably passed effectively over the last 4 years. Now, I know there's going to be the conspiracy theorist out there, and I know what you're going to say, Angelo, Satoshi, the Genesis block, what would happen if it ever is moved. This is not the discussion for that. Another day, another time. Let's now get into something that has been more on my mind, and we've been dabbling in it a little bit along the way. I mentioned Andreessen before, as did you, saying AI is going to be the control layer for everything. If that is true, then who is going to control AI? Is it going to be the big Max 7 corporations? Is it going to be governments? Are they going to nationalize this? Well, obviously China, that's the fact. Like, how is this, you think, going to play out, and why should we care?
Well, the first thing is, so let's separate AI the way it is today versus some form of AGI in the future, which we're obviously getting closer to. And there's people that we both respect, where you've interviewed them, I've read their stuff, where they certainly expect AGI, true AGI. And again, there's no definition of it, but let's just say they expect IQs of above 200 for a computer very, very soon. So once you get to that point, then you're solving problems of everything that you could possibly think of. You're able to have infinite amount of Einsteins on the planet. So you go from having a few people trying to solve a problem for the Manhattan Project and bringing them all together. And now you have stuff that is working 24 hours a day that can solve every problem that you haven't been able to solve before. And it can
like
happen.
Fusion energy and energy costs go to zero being one. Right.
Yeah. So for the concept of controlling it, I don't think there's a way to answer the question properly. But here's the thing that I'll put it for everyone being there, because these are the kinds of thoughts where, why don't I change the question? What would it mean for the S&P 500 when we hit AGI? Well, I wrote this in my paper, and a few people, it was their favorite quote, and it was the Eric Schmidt quote that he did at a class in Stanford with.
You got in trouble for that. I saw it.
Yeah. But his quote about very soon, you're going to download TikTok for the first time and you're going to be like, oh, this is great. I want to create my own. And it'll be created within minutes. Take the code of TikTok, redo this whole thing, go take its users, go start to get new users, and let's compete with it. It's instantaneous competition. So when people ask this question, Angelo, I don't know who controls it. I just think at this point that cyber and Bitcoin are the offsetting side to that. And I say those two. So cyber companies and the ability of what you said, quantum computing, there's never been more importance for cyber. So if you're looking for a sector to spend an enormous amount of time, AI adoption will be massive this year. It'll be something that you just can't, like you said, AI agents, to make sure people understand the rapid growth of AI agents. And if you just use what Mark Benioff said, where, I mean, you're talking about an enormous amount of robots doing stuff 24 hours a day in a group, not one-off. So not like what you're used to in a chatbot, but actually giving them each task, and they're going out and doing this and collaborating together and make sure everything's getting done. Like I said, always use the vision, since it's the speak we have, of grabbing all these groups together with a hedge fund, taking one PM, two analysts, and a trader. That already exists. That's not even a question. And a lot of the biggest mutual funds in the world helped pay for this on AWS and things like that. And I've seen it. These are all open source. You can go download what was built and use it yourself. So I've just kind of taken this as, I've lived in a world where every time there's a conference and I go out to Hong Kong or I go out to Silicon Valley or I go to New York City and I go to this conference, they will roll out the 3 or 4 people each time that have a doom and gloom scenario regarding the dollar, regarding the bond yields, regarding the debt of the U.S., and now AGI is going to be the next one. I don't think anyone can judge how this will play out. The only thing I can judge is it will absolutely be a more volatile world. AI has massive disruptions. It has the ability to hack into anything, which is why when you brought up quantum computing, so Google's advancement with Willow, which doesn't necessarily move us any closer. It just gets people worried about it more today, and it gets the stocks to jump. That seems like hype to me because I just don't think we're as close as kind of everyone is gauging. But the main thing about quantum is, why would you worry about Bitcoin? Bitcoin's value is $2 trillion, while the global system has $700-800 trillion of assets. If I came up with a hack, I wouldn't start with Bitcoin. I would go right to JP Morgan and Bank of America and everyone else that has trillions of dollars. Why would I go to Bitcoin and deal with that thing unless I was just trying to be funny? So I think AGI is something which is coming. It sounds like we're in agreement. I think it's far enough down the road that it's not something we have to really plan for. But if I was going to do something on it, I would say it's more disruptive to the S&P 500 companies than it is to Bitcoin. And that's why I think quantum is further down the road than AGI, and that we're going to have more guardrails in cyber to deal with the cryptography protections growing at the same pace that we're going to have the hackers. So I'd rather use it as it's more disruptive to fiat companies than it is to crypto or to governments.
Sure. I mean, I wasn't even really thinking about the Bitcoin aspect of it, but that does make a lot of sense. And yes, when I go to Silicon Valley and we both hear Andreessen and Peter Thiel and Elon Musk, Ray Kurzweil and others, it appears to be over 200 IQ by probably sometime mid to late 2025. By the way, there are some people that say there are programs out there now that they're early working on that already exceeded that. Now, from a rote memory perspective, it's already way better. Obviously, it's got all the information that's out there, but the ability to critically think. Now, it's deemed to be, and again, we don't really know for sure. If you listen to Kurzweil, probably closer to true AGI by 2029. I could make the point, and Elon has said this too, that it could then be effectively smarter, and again, we use that word a little loosely, than every human on Earth. And that's when you start to go to, what does it mean to have super intelligence? And these are all the crystal ball questions. And by the way, those of you, and I think you're well-meaning, we need to have guardrails on this. We need to be careful. I don't disagree. Here's my problem with it being effectively a global traveler and being very into geopolitical issues. I don't know. Somehow I just don't think China, North Korea, Russia, and Iran, I don't think they give a you-know-what about that. They're going to do their nuclear build, energy, build, because whoever gets an edge, we probably have a little edge on AI over China now. We are definitely behind on drones, and we're at best even on robotics. So this is going to be, I don't want to overly scare people, but this is going to be an interesting 1 year, 3 years, 5 years, 10 years. And I don't know about you. I'm actually kind of glad that in human history that I'm living through this and maybe in my own little way, having a little bit of an impact. My next two questions, Jordi, you kind of answered, but why don't we make it very focused and succinct? And damn it, I was going to ask these and you beat me to the punch. But in a world where AI removes barriers to entry, do economic moats vanish? And how are businesses going to sustain a competitive advantage? Or basically, is that what you're saying about a rocky year in the public markets this upcoming year?
So this is an important question. And the reason it's important, and so I want to give this simply to people in this way, because this has worked well with the people that I know that are not in the industry. So it'll work great with this audience. So the internet was the democratization of information, meaning from that point when the internet came out, the process began where you could get information. As long as you had a computer and you had an internet dial-up, you could get information that before that you could not get. So everyone that had the internet could go out there, they could commute via email. All these things started to change when the internet came in. In 2007, we had the democratization of the internet. So the democratization of everyone now having access to the internet because mobile came. You didn't need a supercomputer. And that got to the point of forget what mobile did, but it gave you there. What AI is, and you have to really take this, is the democratization of intelligence. That's what it is. So for those of you who do not use ChatGPT all day long, I'll use something, Angela. I feel bad for you. I mean, you should be using it all day long. You should be conversing with it in the way that Siri and Alexa have always let you down, because all you got to do is pay $20 a month. And I've written this in my papers. I was on the phone today with a former person who worked at Morgan Stanley, has had various roles, worked at Tudor, worked at a bunch of hedge funds, worked for University of Texas. He and I are talking, and he's like, hey, how do you get this information? And well, those are in conversations with ChatGPT. And he's like, conversations? I went, yeah. He's like, oh, you use the microphone button? I went, no, that's voice to text. I'm talking about conversations, meaning when I'm listening to Jeff Booth speak while I'm walking through McCarran Park in Williamsburg, Brooklyn, and he says something that is really interesting to me, and I want to quote unquote double click on it, I pause the podcast, I hit the voice control of ChatGPT with my AirPods on, and now I'm having a conversation with ChatGPT, meaning I want to double click on, let's assume what I just said, democratization of intelligence. Hey, can you give me some ideas on democratization of intelligence? What does this mean for moats? The exact question that Angelo asked, I will go in there, and this is how my thought process goes. For 10 minutes, I'm having a verbal conversation. If I don't like the answer that it's come back with, I'll pause and say, please pause. Let's go and take it this way. The same way that Angelo and I have done something here, you can do that now with ChatGPT. It's a better learning vehicle. And the reason I bring up the democratization of intelligence, that means when you take Eric Schmidt's thing, there is no more moats. Moats are about time and information. We've just eliminated information, meaning you can find out what every company is doing real time right now. Now, that took the democratization of both the internet and the democratization of in your hand, but you needed smart people to compete with it. So there was still a lead time, you needed scale, you needed money. And like I always say, forever and ever, you needed debt for any long-term projects. Well, the Mag 7 grew their businesses without any debt. It's the first time it's happened in the history of the world that you had companies that grew without needing debt because we went into a non-capital intensive world. The next stage of life of business is about competition by people sitting at home who aren't necessarily born in the zip code. So let's go back to the zip code comment. The reason that being born in a certain zip code is the highest predictor of your financial success is because generally that means that you're going to get a good education. You're going to get the ability to move on. My father is and was a construction worker. He did core drilling. I was born, though, in, let's say, the smallest house in a nice town in Bergen County, New Jersey, a little blue-collar town. But the school system I went to had good teachers, and that allowed me to get out and to kind of go through it. What democratization of intelligence does, it does something that I saw in Brazil, because when I lived in Brazil for 2 years, and I spent a lot of time with the Brazilians, not just the ones in the office, but the people out there, and they had no education. Well, now the greatest teacher in the world, a 200 IQ teacher that can answer any question, is going to be on your phone. You're going to be able to have a conversation with them. You can learn anything. You don't need to have coding skills because AI already allows you to go from voice to code and build applications real time. This gives a leg up. And now the separator between a zip code, it just becomes effort. It just becomes sitting there and putting in the time using AI. So to me, it's democratization of intelligence, which breaks down the zip code, which means every single thing that this fiat system is built on, capitalism, it's going to be disrupted by artificial intelligence because it's the democratization of intelligence.
I got a lot to say about that, but we got maybe half an hour, 35 minutes left. I want to keep it going. And again, I know you hinted at this. And this one, after you comment, I'm going to bring back to the world of the single family office. If AI agents can execute trades, analyze markets, and optimize portfolios in milliseconds, what role is left for human investors?
I mean, the great thing is, Angelo, in 2008, the iPhone comes out, and I don't get it. 2009 happens, I don't get it. 2010, I finally decide I need an iPhone. I have a BlackBerry and an iPhone. 2013 comes, and I go to Silicon Valley, and the person sitting next to me still has a BlackBerry. The reason I bring that up for, all of this, the role an investor will have, is it assumes that everyone migrates to this overnight. I was at a multi-strategy fund to compete with Citadel, Millennium, who have budgets for technology of over $100 million a year, and try to do it with a budget of $3 million of technology. Scale wins at the end of the day. And anyone who doesn't believe that, scale wins. But the problem is there's more people not involved in the scale that are still spending money on other things. So I don't think when you say compete, I don't actually know what it means. Hedge fund returns don't justify the amount of assets they have right now when you aggregate them into everything, especially relative to the risk-free rate. I just think this will take time. And by the time that the last person maybe is having trouble competing with an AI agent, with all the AI bots, at that point, things will be costing less. And most importantly, people would have jumped into Bitcoin before then as a hedge against them being disrupted by abundance. And that's why I always say, get your money in Bitcoin now before it's actually grabbing you and saying you need to put money in Bitcoin.
Does the rapid evolution of AI make long-term investing obsolete?
I think that's been happening. So the answer is yes, but I already think that's kind of been happening, meaning if you just go back to the Mag 7, they're the only winners. I mean, I don't know how to say this, but when you break down who's won, it's the Mag 7. So it's already broken down long-term investing. Emerging markets are a long-term investment. How long can they be emerging markets? They're supposed to actually catch up and grow. And except for a few, if you want to hear the 3 countries in the world that you should have invested in, and I don't think it's a coincidence, it's basically Japan, India, and the US. And what do they all have in common over the last, say, 2 years, but even more? They're all service-based domestic economies. They don't depend on global trade the way China does, or the way Europe does, or the way emerging markets do. They're not dependent on commodities in terms of generating wealth for the country. So I think we're in a point where we've already disrupted the long-term investment things because we've gotten rid of cycles. So far, the only thing that's worked is investing in Amazon, which I'll keep saying has never had a PE below 30. How can you justify owning that as a long-term investment and while you're waiting for it to get cheap, but it never gets cheap?
How will AI impact the balance of power in the investment industry? And now, someone wrote this for me to ask. I disagree with it. Let me restate it. How will AI impact the balance of power in the investment industry? Will family offices outcompete traditional firms with their agility and tech adaptation? Let me take one brief stab at that for a second, Jordi. Yep. You're kidding me. Single family offices on the cutting edge of tech adaptation? No. And now you know why I'm the bad boy of the single family office world and I get in trouble. I probably take money out of my pocket every day. There are big problems in the single family office. There's 1% of them that are, let's go with the word, I'll admit some of it is qualitative, great. Most of them are, by the nature of the law of math, they're just average. They're not, in my opinion, good or very good. And the world of deep tech and AI and all the things we're talking about today, they are way behind. They will be absolutely rocked within the next 3 years. And within 10 years, it's going to be laughable. Now, do I have some solutions for executives and ideas for families? Well, of course. That's my life and that's what I do in the single family office world. So I'm very, very narrow. And I'm going to get to one of those comments or questions in a second. But now I get to be the bad guy, Jordi. Maybe you could clean me up and be a little nicer than I was.
I'll definitely be nicer. Okay, so here's the best. Since I talked to a person who is around my age, so he's late 50s. He asked me at the end of a conversation on what I was doing in AI today, and I've known him for a long time. And he said, "What book can I read to kind of catch up?" And I said to him, "So I want you to understand this, Scott.
Book.
That question means you have no chance to catch up. So how long does it take to come up with an idea for a book, write the book, get it published, and for it to be reviewed enough for you to buy it? So let's assume it takes 18 months.
Right.
Yeah.
You're being a little nice, but okay.
I'm being nice. So if you agree with the statement that the next 10 years will be 100 years of innovation, that means every month is what a year used to be. And what I said to him was, that means by definition, whatever your book you're reading on, the technology doesn't matter. And I said, I can tell you with certainty that what AI can do today versus what it can do 6 months is mind-blowing. So that's the first statement for the single family office. And what that means is, if it's going to take you a year to bring in a software vendor, to go through things, to make a decision, to figure out how long it's, by the time you're making these decisions with any provider, it's already moved on to the next phase of it. The innovation is happening so fast that I think it provides an opportunity for people to do something unique, meaning if you find the right kid out of college who can do stuff in AI, it's much cheaper than it's ever been to build stuff. I would highly recommend people
you
that
are taking
understand.
my ideas, Jordi. I know I talk about that, and I get accused of being age biased against. And by the way, I'm damn old, so I'm not age biased. I'm just telling you the reality of how people think, how more intuitive they are with technology, and the fact that they don't know what they don't know on investing. That might actually be a good thing. A good thing, but. Let me get off the high horse.
I would literally, and this is the kind of work that I'm doing for people. It's like, I would rather have a kid coming out of a mid-tier college that is graduating with enough computer skills and shows the desire, and any of the technical schools, you can get these kids and they'll work for next to nothing. All you got to do is basically send them to AWS training. And it won't take them more than 2 weeks. And once they've done AWS, so Amazon Web Services training, they will be able to build applications. But more importantly, the beauty of AI, and I just want to make sure people understand this. So you've probably at some point come across the word GitHub. So GitHub, for me, is just where coders take all of the things they've built, and they're open source, and you can take those ideas. So think of them as recipes, and then you can alter the recipe on your own. So you can go bring that out, play around with it, and then turn it into what fits for you, which means 90% of the work might be done. And then all you need to do is come up with some creative person that connects it. The reason this is important today is because the infrastructure is provided by Amazon, where you needed to have stuff at your own workplace to do it there. But almost everyone is now on the cloud, or they can go get an Amazon account. And yes, it'll cost you money, but not like the types of money it would have cost to either get software to go through it. I think you have to build things yourself. I would not be paying any money to these software providers unless it's something that you can use today to really reduce your costs. So I'd only do it in situations where you're getting rid of costs. But if you bring a kid on and you get them AWS training, they can go into GitHub, get these models, and you could have a hedge fund AI agent on your platform, which for you would be, hey, go through all the returns of the people that I have this provided to me from Goldman Sachs. Go find the hedge funds I should care about based on XYZ. It can do that. And so that's the way I would kind of view it, as you should be getting someone who's younger, who's hungrier, who came out of a technical college, and just get them to AWS and they'll be able to do all this stuff.
Well, I'm glad the fact that Jordi just took probably 6 figures out of my pocket by giving away one of my secrets, but I promised you that's only one, because it's a little bit more than that. Now, yes. Related, it's a follow-up to that question, so they're kind of interrelated. And let's keep it honest, Jordi, at least for our opinions, which, by the way, could absolutely be wrong. In 10 years, will financial advisors and junior analysts even exist? I mean, isn't AI basically going to take their jobs entirely, or not?
Most of them, yes. I mean, I'm trying to think of a demo I've seen just to give people, in fact, if people want to go watch something on their own to answer this question, Claude, which is an Anthropic LLM,
Sure.
came out with it came out with MCP, which stands for Modal Context Protocol. And there was a video I watched. So this only came out a month ago. There's a video. It's probably 15 minutes. If you're interested in seeing what it can do, this person who has no financial background created an AI agent to basically day trade. And he shows how quickly it was. And he'll take you through what this thing was. Now, he did it on TradeStation. So he's asking, and all he does is come up with a thematic thing. So let's assume you wanted to invest in a hedge fund or let's do the financial advisor since you brought it up. Hey, I'm looking for the best stocks available in cybersecurity. Can you go out and do this? And the AI agent will go out. It'll look at it from a fundamental basis. It'll look at it at a technical basis. It'll go through, obviously, just the cyber companies and what their revenue. It'll come back with a recommendation on what's gone on. This is stuff just created quickly. Over time, 10 years, these things will be so good that the way you see ChatGPT now, we can't do that now, because if you go into ChatGPT and say, hey, what stock should I buy today? It only has information from 6 months ago. In AI agents, immediately you have information from today, because now what you're doing is you're connecting to data on a server, on a search. So all of this information is there real time, because you're allowed to plug into other data information booths with a passcode, which in that case is APIs. You can already do this. So I think completely in 10 years, Angelo, I can't imagine that if there's financial advisors that they're not augmenting with AI at a minimum. You just can't survive without augmentation at a minimum.
Yes. And again, that's a very careful last part of the comment, because there are going to be some people that are very rich that are going to want human interaction. Now, what defines human? How are we going to tell the difference between an avatar and AI? Well, why don't we save that discussion for some time in 2025 as well? But here's what I will say. So you said a couple of things there I wanted to comment on. One, when it came to looking for internal talent, I effectively completely agree, and thinking a little outside the box. And I tell my audience what I do and what I tell some of my consultative relationships. And I don't know, it almost seems like it's politically incorrect to say this. The number one thing that I look for is intelligence. Okay, let me define that a little better, because you're technically not allowed to give an IQ test, I believe, but it depends what state, what country. You could sometimes tell, but applied intelligence. Are you able to apply your intelligence? I look for resilience. I look for the capability to continue to learn. You don't know it all. And another word that's gotten a little sensitive lately, I want you to be obsessed. I want you, and this relates to it, to have high energy. Now, there are certain traits in analytical and accounting skills where you don't perceive high energy as being of great value, and that may be theoretically correct. And again, let's not go into the nuances here, but how could you disagree? Intelligence, applied intelligence, resilience, the ability to keep on learning, and the ability, in my opinion, I want you to be obsessed. Oh, but Angelo, work-life balance. I want people that have a life outside of the 8 hours a day. Well, I don't want you working for me. Like, I'm just going to be honest with you. I don't care if that's politically incorrect or not. I want you to make a massive amount of money. And in my opinion, Angelo's opinion, you better do that in the next 10 years. I might be wrong. I hope I am. I don't know. I'm just saying, I think you should make a lot of money as soon as you can. And that's a little more from my sovereign risk masterclass and other issues in that I talk about. So on to the SFO, which relates to what you said and I hinted at with the financial advisor. I think you need to be so good at your job, so good. And you need to incorporate AI, because eventually, if it's based on analytical data and assumptions, you just won't be as good at it. So look at it from the family office side. It makes them better, faster, and you don't want to admit this as an executive or an employee. They don't need as many of you. It's going to save the family money and be better and be faster. Is it there yet? Not quite. But in the next year, the next 2 years, it's going to be there for those families that are earlier movers. I'm concerned about you as an SFO executive. I want to help the community. But the reality is, a lot of you really, honestly, don't want to be helped. I'm the wild-eyed guy with a beard who talks about things that are looking forward in the future, and you want people that kiss your butt and just give you the basics of what works now. I can't do that. I'm going to be 100% right about this. My timeline might be a little off. I'll give you that. A little off. But I'm going to be 100% right about this. You're going to have people that are deca billionaires. I'm already seeing it. I'm seeing it in Silicon Valley. Deca billionaires that are going to have 1 to 3 person family office teams and be great. And I admit it may be a little early now. This is not going to take 10 years. This is going to happen. No, China invades Taiwan, nuclear wars, then everything's off the table. But if that bad stuff doesn't happen, we're all going to see this play out in the next 1 to 3 years. And yes, I'm at the forefront of it and advising and working with family office executives to make them incredible and family offices to have effectively better, incredible family offices. Jordi, sorry I went a little off there. But now if you could take your comments that are more to financial advisors and bring that into the single family office community, I'm assuming it's basically the same trend that I'm seeing.
Yes. Here's the one thing I'll say. And again, I assume, if I asked you, Angelo, I'm assuming the number one risk for a single family office, to have a single family office, you've already made money. So the question is the biggest risk to make sure that you're not caught in a situation where you're, quote, underperforming? Number 2, where obviously the value of the family office is going down is the bigger risk. Underperforming or, it going down significantly? I'm assuming that you're...
I'm going to ask you a very tough question now since you brought it up. And we're both probably going to get in trouble. Would you agree, being a retired hedge fund manager, you know a hell of a lot about investing? I've been to some family offices and the principal shares this with me, shares that with me. And I'm like, to myself, and sometimes if I know them better, you just missed out on $100 million this year. Oh my God. What do you mean, Angelo? Look at how your CIO and your family office is investing. They're missing everything. Oh, but I'm conservative. I'm already rich. I don't want volatility. But you walk them through the math of it, and it's shocking. There are some family offices that are so bad. Honestly, Jordi, they're costing, depending on the scale of their family already, if it's like a deca billionaire family, they might be costing their family $500 million a year.
Okay, so let me say this, and some of this will be to... I get brought in for these situations. So people who don't know me, my role at the hedge fund was really to manage the portfolio managers and then to speak to our clients. Our clients involved family offices, obviously pension funds, consultants, RIAs. We had products, we had mutual funds, we had everything. So it's not normal for let's say a person like me to be brought into conversations and to kind of get on the phone with people. But the reality was, for the last decade, it's been a very confusing time for people. And you asked the question about the skills or the things to look for when you're hiring people. I agree with everything you said. Wrapped up into that, in this environment, is curiosity. The next 10 years, we're talking about, will there be 2 billion robots or 10 billion robots? What will we have on Mars? Will we have people living up? These are the types of questions that, how do you make money off that? How do you preserve wealth off of that? I think it's a very complicated time. And I've always been someone who, number one, like I said, not going to an Ivy League school, being able to rise the ranks of Wall Street and do it in a way where I'm a macro person that can speak with any macro person on a stage anywhere and talk about every single data point that exists, whether it's where the dollar is, where rates are. I can do that all day long. But I also like to talk about it the way I grew up, which is with a bunch of knuckleheads where we talked about the value of sports teams or this and that. And I still do that. So I've been brought in to talk about complex situations in a way that people don't feel like they've been condescended, like they feel like they've been talked down to. I think it's really important, Angelo, for people to realize the next 10 years are going to be something the world has never seen. We're talking about 100 years of innovation. And I think single family offices, the way you describe it, they probably need more conversations on this to get them to be comfortable, because I think it's going to be a really challenging time. And if commercial real estate doesn't work anymore, if VC doesn't work anymore, if you're barely getting above the risk-free rate on most of your investments going forward, I think it offers up a very challenging time. And that's one of the reasons why I decided to go this route rather than the hedge fund route, because I think hedge funds are going to be disrupted too. And so there's very few jobs that I want to be involved in. I'd rather be helping people. I'd rather be exposing them to how to deal with AI and transition. And that's what this business was about, which is how do you get ready? And I think single family offices, they were not my target audience, but I'm happy to help anyone who wants to do it or build a relationship where they're at least getting some comfort, because I think it's going to take comfort going forward during these times. And you need to have people around you that can at least give you some opinion, which you're doing, Angelo, and that's pretty much what I'm going to be doing as well.
Yes. And Jordi, I have complete faith in your intellectual capacity, your capability, your obsession in terms of your transition in the last couple of years in terms of what you're doing. I will tell you, from my perspective, being obsessed with single family offices, traveling everywhere in the US the last year, around the world over and over, there are very, very few people like us. That doesn't mean we're better. It just means that maybe we're a little more out there and edgy and seeing around certain corners, and maybe our timelines are potentially a little off. Sadly, too many, and boy, am I burning every possible bridge now, too many advisors and consultants in the community, they are so far behind on this. Like, even those that consider themselves more of a tech-centric advisor, they're still talking to you about the basics of aggregation and reporting on traditional platforms that have evolved a little bit the last couple of years, but really, like what you described on building your own and AI agents and taking in feeds, this is all practically, if not right there now, we are really, really close to it. Unfortunately, the people that get invited to speak, and often are some of the so-called thought leaders in the community, they are years behind on this. And for the reasons we spoke about when I led this conversation, they rather be right, per se, their perception of being right and not changing their mind, than anything else in the world. And yes, I'm sorry, as you get older, it is harder because you've had a level of success in the past, and it makes it harder for you. And there's biological reasons as well. As your brain ages and matures, it's more difficult for you to be more open-minded, which maybe brings me into a lot of the things we both love on critical and deep thinking and decision-making, Bayesian thinking. If you could give the audience the context of it and how it could apply in what we're talking about now.
Yeah, and that was one of the things I was going to say when you brought up what to look for. So everyone who's taken a statistics class has heard the word Bayesian, but so everyone goes through it. I've written many papers on it. As new information comes in, your views should change. And the easiest way for me to make this something that makes sense is to take the Sunday NFL games football spreads. So if the Eagles are favored by 7 points over the Cowboys, and on Wednesday, Jalen Hurts announces he's hurt and is not going to play, that's new information. And so Vegas changes the odds. And now the spread goes to, okay, the Eagles are now only favored by 4.5. So that's what Bayesian thinking is. And in a world where innovation is happening so fast, you have to be able to adapt. So I will give you like an input for the S&P 500. So today, I tend, when the S&P 500 is down a lot, I tend to get a lot of panic phone calls or texts from people who read what I do or follow what I do. And they said, are you worried about this extending into a bigger correction? I said, no, I think there's two possibilities. And I kind of laid them out. He goes, what gives you so much comfort? And I said, well, my number one indicator for the next 6 months is NVIDIA's PE. They said, why does that matter? I went, because NVIDIA has a moat right now around AI, and it's not going away in the next 2 years. And their PE right now off next year's earnings is 30. So it's as cheap as it has been since AI started, and they've outperformed and they've beat earnings. So I never would have used NVIDIA for the S&P 500 until the last year as a gauge of when it's oversold. But when their PE is actually at 30 and they're unchanged over the last 6 months, believe it or not, I think the AI trade has consolidated enough that the S&P 500 will bottom here. It'll probably start a rally back up to the highs. I still think it's going to consolidate, but that's just an example of Bayesian thinking. Is you have new indicators now which represent the market today when I'm looking for views on the world, where I have to do a weekly webinar on my YouTube channel to show people what happened for the week. And so that's just an example of it.
And how would you weave in, it's become trendy lately with Elon and others, what is deemed to be first principles thinking?
Again, I think, and this, I was going to bring this up before. If you listen to Elon Musk right now, or any of the people in Silicon Valley, and sticking to first principles thinking to kind of navigate through this stuff, meaning a world of change and a world of going through it, it's really important. These phrases, these concepts, everything about them, honestly, I can't emphasize this enough to people. If you're not doing this stuff on a regular basis, meaning you hear something that's new and you go to ChatGPT and you're like, okay, what do I have to do to improve my Bayesian thinking? Well, it's really important that you're able to do that. I mean, it's really important for you to be able to move with the markets, move with what's happening. And I think when you bring this stuff up, and it's good that you are, Angelo, and it's good that we caught up again, but getting to the fundamental truths, meaning first principles, and then building up from there, it's about going back to the basics. And I think, you question assumptions, you move to where you need to go. And most people don't do that. And so I think when you're bringing up the fact that people should be doing this, it's really a lot simpler than people believe. Bayesian thinking is just being a flexible thinker and taking in new information. And honestly, first principles is going back to the basics and the fundamental truths. And if you can do that for everything that goes on and not get caught in the emotional biases and kind of the swings that happen with it, and you just take a step back, and I mentioned that I'm a systems thinker. I look at the entire picture, and that's why, and again, I hate to bring it back to Bitcoin, but I don't worry about Bitcoin. I don't care if it has a 30% correction. I don't care if it has a 20% correction. I know that everyone that buys it that matters holds it. And that means that we have a finite amount. So it's just getting accumulated. And I'm not focused on the small term because I have a long-term viewpoint of the disruption that's coming from AI, which leads to the digital economy accelerating, which leads to Bitcoin. So unless something changes on that, for my macro view, those are my first principles. That's the basics behind what I'm doing. And then I use the Bayesian thinking to change those views. If quantum goes faster than what's expected, I'll start to worry a bit, and maybe I'll put some hedges on, things like that. But that's the way that as a trader, I adjust to things and I change the odds. And first principles just keeps me grounded to what I think is going to happen. And then I'm using the Bayesian thinking to change that framework as it moves along.
What does it take, maybe a combination of that, to thrive in a world where chaos, I could argue not order, is kind of the default state?
Honestly, I think the world we're in right now is absolutely chaos. I mean, what do I mean by that? So let's go through the last 4 years. We had a pandemic. We had never had a vaccine that had come out in faster than 3 or 4 years. The vaccine for Moderna was done in 2 days. Like, the concept, the blueprint for the vaccine was done in 2 days. That's because of AI. So we're in a world because of AI that problems happen quickly and then they're changed. So fast forward 2 years, we have an interest rate cycle we've never seen before, which has always led to a recession. We don't get a recession. We've had Russia invade Ukraine and is still there. We have the Middle East. I mean, there's no way to describe what's going on. We had Silicon Valley Bank go from being, it went under in a matter of hours. Like, we live in a world where everything moves faster than it ever moved. I wrote a paper in 2020, called speed chess, meaning it's like playing a game of speed chess. And that was before ChatGPT had been launched. Now everything's going to go faster. And so chaos to me is just taking a 10-year picture and moving it into 1 year where you're getting a lot of good stuff and a lot of bad stuff much quicker than you used to get. I thrived in chaos because I grew up poor, because I like it. I really do. I really like cooking, and I don't follow recipes. I like the chaos of just like, what do I have in the fridge? Let me go cook it. So I think we're in a world of chaos, and I think people are gradually getting used to it, I guess is the point.
How would you address this issue, Jordi? You got a great background. I think you're definitely a first principles and a critical thinker. Let's make me a decabillionaire. I'm really happy. And I want to bring you into my family office. But I'm saying in an interview, forget the money. I'm going to pay you incredibly well, assuming you're even interested. I think we have a principal agent problem unless you have skin in the game. Do you believe in that concept that for you to really be obsessed about the position, to make a lot of extra money with maybe a little bit of golden handcuffs, that I want you to have skin in the game? Is there something wrong of me of wanting that?
No, I mean, to be honest with you, most of my net worth was in the hedge fund that I was a part of. I didn't get paid really the final 10 years there. I was an equity owner, and that's what I wanted. So now what do I have? I have tax benefits that come from not making money on the equity that I had, that I wanted to go in. Most people, you would want them to have skin in the game, but there's different forms of skin in the game. That to me, again, I view everything in life, and I've been doing this. I mean, you made a comment, I haven't brought it up, but aside from AI, aside from Bitcoin, my other obsession in life is longevity. I mean, I'm a longevity freak. If I took you through what I do every day, it's insane. I eat certain types of foods, but I also want to enjoy myself. So I know what I can do, what I can't do to continue my longevity path, because I know 5 years from now, we're going to be hitting most likely escape longevity velocity. And that just means that we'll be gaining 2 years for every year of living. And at my age, I just want to biologically be younger than I am so that I can benefit from that point. The reason I bring that up for this is the skin in the game is really an opportunity cost for everybody. So if you join, like if someone said, hey, we want to hire you, we don't want to pay you. Well, that's fine. I've made money. I don't need to be paid. So my skin in the game would be, well, how am I going to benefit down the road? Because that's taking my time. So a lot of people don't realize, and this is the thing about Bitcoin, Bitcoin not only makes you money, but it buys you time. It gives you the time because it's working for you faster. The reason I'm in this market, so if your father didn't graduate high school, as my father did not, he ended up getting his GED, and he's a core driller. My mother didn't graduate college. I'm the first person in my family to graduate college. How do I end up at Morgan Stanley, and what drives me into Wall Street? Okay, number one, my father taught me, as I said, how to handicap, how to do math in really, really creative ways, how to think outside the box. But I guess the main point for anyone who's kind of thinking about the skin in the game thing, I literally wanted to just take a job where I had a puzzle. That's what I like, the puzzle. And the market to me was the greatest puzzle I was ever exposed to. But there was one other thing, and this gets back to something you said about decabillionaires. I like compound interest. It was the greatest thing I had ever seen. When I realized how fast money accrues when you just let it compound at big numbers, every person that's wealthy has compounded money. They didn't bail out. They didn't take their money at $1 million and put it into a bank account. They compounded it. And I think compound interest is what it is. So when you talk about all this stuff, I think for anyone that's joining, they should have skin in the game, but I think there's different forms of skin in the game. And that's the point about time and where it is. I'm willing to do things for people at very low money, but it just comes down to how much time I'm spending on it.
Jordi, I took enough of your time. I want to give you an opportunity for the audience to learn how they could subscribe to your Substack, some of your services, how they could reach out. Then I'll give a close and wish everyone a happy new year till a couple of more days. Then the new year begins again.
You can find me in Twitter. You can find me in YouTube. You can find me in Substack. If you just, at this point, it's gotten to the point where If you just type in Jordi Visser, you'll find me. But almost all my handles in some way incorporate Jordi Visser Labs, which is the name of the consulting firm that I'm doing. My website is back under design again because I had made it myself, put it out, and I want to make changes. So this is from my coding experience. If you want to reach out directly in LinkedIn, I respond to it. I mean, honestly, that's how Angelo got in touch with me, is he reached out through LinkedIn. The email that I'm on all the time right now is jordi.visser30@gmail.com. If you reach out to any of those places, you'll find me. You can DM me on X, but you can certainly get me on LinkedIn if you want to have a conversation and talk.
And by the way, everyone, that's Jordi, Jordi, and Visser, Visser. It's been a pleasure to reconnect with Jordi after this many years. I'm looking at about 50 questions I just didn't have the time to ask. One day I'll break my record on my 3-hour and 20-minute podcast, but I don't want to torture Jordi. It's not going to be today. I hope you all enjoyed it. I appreciate all of your support through really my first full year since I sold Family Office Association, which is what 2024 was, and building up my private club at SFO Continuity. Thank you for all the interest and for the members. I greatly appreciate you. I have an incredibly active agenda, digital and in person, masterclasses, private white papers, research, consultative work. I have a busy 2025. Go to angelorobles.com and simply have an opportunity to join. Effectively, charter membership is effectively over. Maybe we could squeeze 1 or 2 more in, and then the pricing is going to go up from there. So you'll see that at simply angelorobles.com. Follow me on YouTube, LinkedIn, and all the platforms. I'm often either my name, Angelo Robles, or at Family Office. Yes, especially on YouTube. I do own that great handle. I will be doing a brief solo program Monday, so that will technically be my first official program of the year. I'm labeling it, which relates to some of our conversation today, and it's going to be very brief, by the way, shockingly for me, the Detroit paradox, seeing a threat, but failing to act. Now, as you could tell from that name and that commentary, I'm talking about Detroit in the 60s and 70s, seeing Japan coming and didn't do anything about it. And yeah, the oil embargo and all that were all challenges that you could argue can't be foreseen, or could they? Again, black swan events do happen, but obviously the Japanese were way better in their efficiencies, their manufacturing, and their trend to smaller, more cost-effective cars. And trust me, I know, because I spoke to insiders, they saw this coming. They elected to put their head in the sand and not do anything about it. And this will relate to the subjects I spoke about today with Jordi. And I have some comments I want to give on it that will be relatively brief this upcoming Monday. It's probably going to be public across all my platforms, but I really would prefer my messaging and direct questions to come in from exclusively how I structure it with my members. But there are some things I do make a little bit more public, and that may end up being one of them. So on that note, again, Jordi Visser, thank you so much. Everyone have a wonderful New Year and New Year's Eve. And if you're hearing this on a recording, it'll be a little after that. But there's a lot to do in 2025. Again, I appreciate everyone. Thank you so much. Look forward to the next time. Thank you, Jordi.
Thanks.